Alhamdulillah, wassalatu wassalamu ala rasulillah, amma ba'd, assalamu alaikum wa rahmatullahi wa barakatuh. Guys, welcome back to another episode of The Cave Podcast. This is that podcast where we talk about Muslim businesses, Muslim investment opportunities, and Muslim economies. The idea is take your money out of the West and bring it into Muslim economies. As you guys may or may not be aware, there are certain communities that like to keep the money circulating inside their own circles. We want to ensure that our dollars, our pounds, our dirham, our riyal circulate amongst our own people so that we can, create momentum, cash flow opportunities amongst our own peoples, because money is leverage. Inshallah ta'ala, money is power. Now, today we have an illustrious panel. Once again, alhamdulillah. We have Sam, the Mughal of real estate. Allah Barak. You have the general of Bitcoin, the captain of Bitcoin, graduate from the Islamic University of Medina, expertise in Islamic finance and Bitcoin.
And Bitcoin, yeah.
MashaAllah, tabarakallah. And then here we have brother Mohamed, who, Allah Barak, is a second generation contractor in the real estate development space, construction specifically. Him and his father IPO'd a company in Qatar.
Yes.
For over $1 billion.
Almost
$1 billion, Allah Barak. And now, MashaAllah, tabarakallah, the brother's doing big things here in the UAE. And we're going to get to know our panel as the weeks and months go by, inshallah ta'ala. We have some interesting topics that we're going to talk about. But before I go into it, just want to remind you guys that we do have a network of 7 to 9 figure Muslim entrepreneurs, investors, and senior corporate executives. In fact, the entire panel here is part of that network, alhamdulillah. And a lot of opportunities take place inside of the room. So if you guys want more information about how you can have access to what, inshallah ta'ala, will become, if it already isn't, the most leveraged and influential group of powerful and wealthy Muslims in the world, click the link below, inshallah ta'ala, for more information, and you can apply. So today we're going to talk about AI. There's a lot of talk around, are we inside of an AI bubble, right? Is AI overhyped? And what type of implications does that have for people that are investing in AI, that are integrating AI into their businesses, so on and so forth? We're talking about Bitcoin. So Eric Trump is right now pushing Bitcoin, so it's becoming mainstream now, Sheikh. It's become mainstream at that level.
Yeah,
Fox News. So what does that mean? Are we still in time? Can we still benefit from it? Right? We'll talk about it, inshallah ta'ala. So there's a lot of brothers, obviously, inside of our network, right, that, mashallah, are very, very liquid rich and just deploying capital, like right, left, right, center. Alhamdulillah, just investing in this, investing in that, looking for opportunities. I literally spoke with a brother yesterday. He said to me, I have a very high risk tolerance. I'll put down £100,000 and I won't even mind if it goes to zero. but
Abdullah, right?
Yeah. So point being is that there's some are investment savvy, some are not. They've got money. So I was having a conversation with a brother who's a mutual, and he was just basically saying, like the best thing to do is to just get like a wealth manager involved and help him, either create a fund, or if they've got 5 million that they want to put in assets under management, give it off to them. They'll usually bring like a nice 7% return and so on and so forth. But that I've been thinking about this, right? Of course, investment's not my game. I'm learning from you guys. But I was like, that conversation we had about Bitcoin the other day, that for the last 5 years, it's increased in value 39% on average 5 years in a row. Mm-hmm. So why would I be looking at a 7% return for these traditional wealth manager kind of things? We'll talk with yourself when it comes to real estate development, right? You mentioned earlier, just before we actually started, that real estate, it's very hard to lose money in real estate. If the market's up, the market's down, as long as you're buying the land.
Because that margin is just going up and going up if the margin stays the same if the market's up or if the market's down.
And if you're developing, is it right to say every 2-3 years at least doubling your money, or is that
that will be a stretch, Sheikh, but good money, very good money.
0.5?
Yeah.
Definitely. You're 1.5xing, right?
Yeah,
sure.
Easy.
I'm saying,
but big different. But it has to be very clear. We're talking development.
Yeah,
not
buying a rental property.
Yeah, not buying and selling.
But even property management, there's guys getting nice, healthy 20%. You know what I'm saying?
Yeah.
But my thing is I'm interested in what your philosophy is an investment strategy.
I know where you're going, Sheikh, and I know the mutual brother who said tell them to invest with the wealth manager and get 7%. Right? That's what I said. Yeah. So, Sheikh, I also feel awkward like that sometimes. And the nuance is the word.
Yeah.
Is when people ask me, and I know the brother, like he said, however, let's say, whatever, crypto, somehow, alhamdulillah, Allahumma barik, let's say they have $5 to $6 million that they did not have last year. They have it now, cash, liquid, ready to invest. And they asked me, Sam, what do you think I should invest in? Should I put my whole money with you? It's a very conflict of interest.
Yeah.
Very like awkward position. Very conflict of interest position.
Yeah.
So I literally tell them, because I know the mutual brother who said go to wealth manager, because his ticket size are much higher.
Yeah.
But he's also in a position to raise capital. Sasha?
Yeah, he's
a venture capitalist, right?
Yeah. A million is the entry point.
Yes, $1 million is an entry point. He's a venture capitalist. So when you ask him, what should I do with my wealth? And I knowing him, even not being at his level, I also feel the same thing when people ask me that. When I know I'm raising capital for a project and I know they have the capital, they're asking me that. So it sometimes becomes a very nuanced thing, Sheikh. You know, I believe our project is the best. I believe like your money is going to be put to right work. But should I tell him like, hey, put all your money in? No. Right? So at that time, should I give him the advice, put this much allocation in Bitcoin, this and that? I'm also not qualified to do that because I personally invest majority of my money in real estate and in my projects.
Yeah.
Do you understand, Sheikh? So it's a very conflicted position to be in.
Yeah.
So at that position, I think, and I'll finish with that, I think there is wisdom to what brother is saying. The wisdom is, Sheikh, if this is your first, because sometimes you get big check, but you do not get a lot of maturity in earning that.
Yeah.
You do not get a lot of discipline in earning that. It could be inheritance money. It could be a crypto, you figured out the cycle perfectly and you have $3 million. I know so many brothers, literally $3 million, but no discipline. There's no financial discipline or anything to it.
Yeah.
So it's better that actually, Sheikh, it's better. They put it with the wealth manager and they get 6, 7%, 8%. They learn the discipline. And in that 2-3 years of journey, they actually learn investment. Then they can actually figure out, okay, so this is what VC is. This is what private equity is. This is what real estate is.
If I could just add on to that. So
Yeah.
I don't have an issue with them going to a wealth manager. I'm like, why are there not wealth managers that are basically looking for these type of opportunities where they're putting they're putting their clients' money inside
There
Bitcoin
are,
and
Sheikh.
but they allocate very small percentages of the portfolio.
And because of their perception of it being high risk.
And the stock market is where they put majority, right?
Yes, because historically, if you put it in 250 US companies out of the S&P, historically in the last 30 years, you have not lost money.
So then technically, is real estate and Bitcoin high risk then?
It's not.
Traditionally, yeah.
Bitcoin, I don't know, but real estate is not high risk, but the operator could be high risk. So, Brother Mohamed, so for a person, it could be like...
so do you find wealth managers, right? And maybe someone can apply for a job here because we're looking but do these wealth managers exist where they're going to find you like safe opportunities that are higher returning?
Sheikh, I know exactly what you're trying to clock.
Yeah.
So I think this is where it's our failure, the operator's failure, that we are not networking with those wealth managers and we're not creating a network. Do you understand what I'm saying, Sheikh?
Okay, listen. I'm not a person that brings you investment opportunities very often. And if I do, I can guarantee you and promise you one thing. It's been looked over and scrutinized at least 3 times over. So there is a brother called Sam Amin. You might have seen him on my podcast. And he, Alam Barik, is helping Muslims become rich through real estate. Now, this is not for people that are trying to go from 0 to 1. We're talking about guys that have savings. People that have at least $100,000 liquid capital ready to be deployed. He has an opportunity for you. It's a project right here in Dubai, 100% riba free, inshallah, 50% returns within 2 years. And there are only a very few bit of allocations left. The land has been purchased, the architectural work has already been done, and very soon they're going to be selling off-plan, inshallah ta'ala. And once the off-plan sales start, the door closes. Just so you know how much of a golden opportunity this is, you are currently able to get in at the land where it's 1,000 dirham per square foot, inshallah ta'ala. They're going to be selling this at 1,700 plus dirham per square foot. Do you understand how big that margin is? With Allah's permission, is tawfiq. This type of opportunity, it's not just rare, it may never even ever come round again at this stage. So it would be not smart to miss this opportunity, especially when it's halal. There's no riba involved, inshallah ta'ala. So this is genuinely and truly the final call. And once the door closes, please don't message me and I'm talking to those that actually know me personally, sending me messages on WhatsApp saying, please get me in. Once it's done, it's done. So again, if you have $100,000 minimum liquid cash ready to deploy within the next 30 days, only in that situation should you apply at the link below, and you can speak to one of Sam's team members directly on the phone, do all the due diligence, ask all the questions. They'll put you in touch with his investors, inshallah ta'ala, from the past. You can see it's all legit. And then hopefully you can do the deal. With that said, may Allah bless you. Apply at the link below. Like, I'll give you an example, right?
Yeah.
Like, for example, I was speaking to Jawad about this because he has like a wealth manager type of background, right? So he was like, there are some businesses that are just like, bro, just invest in them. It's a no-brainer.
Cash cows.
Yeah, like we used to talk about startups. He was like, for example, if the money that they're raising is not for marketing and it's not for building, right? It's purely for fulfillment and scaling or scaling, and they've got contracts in hand, not LOIs. Like, they've actually got contracts in hand. Signed. That's the type of thing. Well, that's
it's literally.
He said these
cash
kind
cow.
of thing. He goes,
Literally cash cow.
they're super safe. Do you know what I'm saying? So is it that these wealth managers don't have access to these type of deals?
So these are alternative investments, Sheikh. So wealth managers, traditional wealth managers, don't not only have access, but they're not trained to invest in alternative. And that's why Blackstone, we mentioned that many times, they're the largest alternative asset management company. Alternative asset.
So so these are alternative wealth managers?
Yes. Alternative is private equity. Alternative is in these businesses, musharakas, murabahas, finding these type of opportunities.
So
these are alternative.
Are there, like, for example, are there guys that you can hire for this, or you have to do it independently?
What do you mean, Sheikh?
As in, let's just say I don't have the time or the wits about me to do that.
Yeah.
Right? I just want to hire someone to do that. I don't want a wealth manager who's going to put my money in the stock market. I don't even believe. I'm even concerned about whether it's permissible or not. Right?
Right.
These Sharia compliance standards, Allahu A'lam about that, right? That's the first thing. So I want a guy that's going to look for these, he's going to assess these startups for me. He's going to look for the opportunity here, with yourself. Put say Bitcoin is doing 39% for the last 5 years. Every 4 years, it's done this much.
For me, how it happens, Shan, this is not at all a plug for the cave, but it's through networks like this, the cave or other ones or whatnot. You go and talk to people who are in similar situation as yours, and you'll always find.
Reason is because I want to hire someone that does this in the cave. And is it a job title? Is there a particular job title we should be looking for?
So basically,
it has to be homegrown.
It has to be homegrown, Sheikh. It has to be homegrown, and then also comes the conflict, because if the brother from the cave will only promote the brothers from the cave and their products, then it becomes the same conflict.
Not just guys from the cave, but like, for example, there was that opportunity that came.
And by the way, this is a show for people getting free. Like, we're having a live banter. We're live arguing.
No, I'm saying like for example, the opportunity that we won't mention details, but this F&B opportunity that just came up.
Yes.
The guy's not in the cave.
Yeah.
Right?
Yeah.
$5,000 is the minimum entry ticket. There was that floor that became available in St. Regis Hotel that you could now purchase and then put on short-term rentals and whatever have you, right?
Yeah.
I mean, these are not in the cave, but it's through our wider Rolodex.
Yeah.
So now I'm saying someone might assess the safety of that investment.
Yeah.
And the ROI.
Oh, okay, I see now the thing, Sheikh. I see what you're saying. So that's investment committee. Committee. We put an investment committee together for the cave. There is someone who chairs the investment committee.
Yeah.
But in that committee, there are crypto experts, real estate expert, market experts, private equity, just in general assessing business expert. Put 5 to 6 maximum in the committee, and there's one person that chairs that committee with 25, 30 years of experience in JP Morgan, Goldman Sachs, something like that, wants to leave all of that for something Sharia compliant, but has broad, wide, and deep idea about multiple products. And we have brothers like that, right? So they chair the committee, and there's 5, 6 guys, just subject matter experts, and they vote, and you create the bylaws and the charters. That's how usually, even in Blackstone, they have 100 plus investment committees for every investment decision. You understand? So basically an investment committee. So anybody can come in the cave, let's say, even members outside of the cave, or they join the cave and they say, I have this proposition, I have this business, I'm raising capital. So it has to go through the investment committee. They see if it's a viable deal. Then the chairman looks at it, reviews it, and puts as something, okay, we approve it. It's legit. The operator we can trust. The business model, we looked at it. It's viable. And then up to you, however much you want to put in.
Yeah, because I feel like opportunities are not rare. So they're very common. They're coming left, right, center, but it's just during the due diligence, during the
People don't know how to do it, Sheikh.
they don't right because even I was with the VP of strategy and growth at Wahid, and he was saying, bro, we get sent deals like I think he said almost daily, but we just don't have the time to kind of go through it. So I'm saying these opportunities are always coming.
Yep.
And if we can have like these more dynamic portfolios where people can make more than 7%. That's what I'm trying to get at.
More than the percentage, how you opened up the show, helping the ecosystem.
Right.
But that's
and that's another big thing, which is looking at
more than the percent.
But then the thing is, am I just thinking of a fool's dream when everyone else is making 7%?
I would add 2 or 3 very important points. Is that first of all, we all know the higher the risk, the higher the reward, and vice versa.
Yep.
So real estate in its essence is a very, very, very safe, very stable sort of investment. And I will always advise that you would, at least if you had to investment, at least 50% or more should be in real estate. At least 50%.
I second that, brother.
Yeah.
But that's not traditional wealth management thinking.
No, it's
but
not.
But I'll tell you why it should be right now. I'll tell you why it should be.
This is what I want to hear from you.
I'll tell you why it should be. Because now we are at a very, very, very pivotal point in recent human history and economics, especially in real estate. Because the only reason why before they were a bit reluctant is because of liquidity issues. Because if I have a $100 million asset or 100 million dirham asset and it's sitting, it's very difficult to buy and sell, to get rid of it. But now with tokenization, you could sell parts of it. So now liquidity is not an issue anymore. So now it's a completely...
crowdfund, you mean?
No, now you can
sell
take the
units
building.
of the whole building, Sheikh. Let's say you divide it into 1,000 units. These are 1,000 tokens.
Isn't like what you've done?
No. It's different, Sheikh.
I'll say, for example, you own a building. You own a building. And that building is worth 100 million dirhams. And you divide and you say, you know what? I need liquidity. I'm gonna convert. I'm gonna create a token that's backed by a portion of that. So every token that I have represents, for example, 1% of that building. So I'm gonna sell 10. That means you're going to have 10% ownership in that building, which would have not been the case before because blockchain now, the blockchain technology allows for that.
So Grant Cardone did, right?
Yep.
Yeah. So now that liquidity issue is not there anymore. So now you can have a hard asset, a very safe one that brings 20, 30%, well, let's say 10% to be conservative on a yearly basis, but you could actually sell a portion of it without having to get rid of the entire asset.
Makes sense. Okay.
So this changes things
like
completely.
When you have stocks, but you split stock.
Yeah.
And stuff like that. Okay.
Pretty much, exactly. But you couldn't do that before. Now you can do it.
You couldn't do that with real estate before.
It's becoming the biggest thing that's going to change the way that wealth is shifted from industry. Because now, if we remember, we had that discussion on the Zoom call, me and you, is that all these people that are sitting with all this crypto money on screen, digits on the screen, they're like, okay, we need to park this money somewhere. So now they want to shift it and to throw it, to deploy it in real estate. And with the tokenization of real estate, it's becoming a lot easier. So now it's in hard assets and they don't have to keep it in crypto anymore. And you'll see that it's a very, very, very big thing that's going to take place now. Real estate tokenization, and that will also change the way that wealth managers look at diversification asset. Because if liquidity is not a problem in real estate anymore, then your problem is solved.
So you're saying 50%? Just a question for
minimum.
You,
I mean, just a little. I have a slightly different take on the tokenization thing because obviously crypto is the whole thing. My game's up. The issue of the only benefit tokenization has is the ease of transfer of ownership. In terms of, I can send you the token, and whoever has the token has essentially the ownership of the asset. There was a and I think that is the current buzzword in the UAE specifically. Is the government's going full ahead in this idea, even in America as well, the idea of tokenization of assets. Because before that it was a bit more complicated. You had to use SPV. You could do SPV, but it was a bit more complicated. But
not slower too.
It's a lot slower, yeah. So I think the main benefit is to do with speed. Because what tokenization does is that it removes the middleman and the friction. Rather than call up a broker and get him to make it happen, I got to transfer the token. And the main bottleneck before was just legal bottleneck, as in these tokens that have attached to this asset, will the government even acknowledge it? Which the governments now are getting behind it, saying, yeah, we acknowledge it, especially in UAE.
Yeah.
They're saying, yeah, we're backing that whole idea.
They're one of the first ones, actually.
Yeah.
Globally.
They launched.
But the idea of tokenization was been around for a while, but the problem was the legal bridge.
Yes.
How do you make this token actually be
Regulations
connected to
and
the real
compliance.
thing in the real world? That was the main issue. But beside that,
Allocation-wise, Sheikh, what do you think?
pardon me.
Allocation-wise.
But I wanted to answer that not from the angle of Bitcoin's a currency 100% in, from the angle of an investment, from the angle of an investor. How much of your portfolio should you allocate to Bitcoin? Forget the other cryptos, Bitcoin.
The thing is, that's why I'm not an asset manager because I don't like the idea of answering someone else's needs. Meaning, if like myself, if you have studied Bitcoin, you know what fiat is, and you're ethically driven to escape the riba system, then it's not a big deal for you to say, yeah, Bitcoin 100% of my free capital. It's not saying investment capital, just free capital. If I have, rather than having dirhams or pounds or junay, I just have Bitcoin. If I need to buy a car or invest in a property, I can do that. It's entirely up to you. But in terms of how much percentage you have here and how much percentage you have here, the only thing I can say with confidence is crypto, 99.9% of crypto is a scam. You should have zero allocation to crypto as a whole. Bitcoin is the only exception to that.
Not Ethereum, not Solana.
And the only reason anyone made money on cryptos is by accident. Guaranteed.
Ethereum,
By accident.
Solana.
By accident.
Wow.
Ethereum.
And I can prove it on the charts. I do it all the time.
But Ethereum. Like I said about Ethereum.
Yeah.
Let me explain. Ethereum had an all-time high in 2017. And in the 2021 cycle, it didn't even get that high. It didn't even get to the previous all-time high. And in this cycle, it didn't even get past the previous one. So every single cycle is getting lower and lower. It's making lower and lower highs in Bitcoin price. Now, if you measure it in fiat, yeah, maybe make some money. But if you measure it in the daddy, Bitcoin, it never beats its Bitcoin in terms of gains. Even this one, I was watching closely as a little meme. Will it do any better than previously? Because that was a big issue before. Will it beat the previous all time? If it doesn't, it's a failure.
Yeah.
So all of them, I think only the exception of Solana and BNB, every other coin never beats its previous all-time high in Bitcoin value. Meaning, if you made money before, it was an accident. I can show you. It's proven. I can show you to objectively.
Wow.
You're not gonna make money. You can have the best setup. You can have all the good news. You would not be just holding Bitcoin. Nothing.
This.
I know. I've known. I can't.
It's
I
not
don't
my
know.
field, so
I don't know any person in the almost 10 years I've been in this space who's come to me and said, with the exception of one or two off trade, like I said, but if it wasn't just an accident, who's come to me and said, you know what, brother? I made more money in this other coin than just holding Bitcoin. Every single one have said to me, oh, brother, if only I just held Bitcoin, did nothing else, I'd be better off. At the beginning of every cycle, I have less Bitcoin than when I left and when I started because I went in this coin, that coin. I know a brother who called me in tears this year because he lost everything on coin. I told him last year, I said, bruv, please don't do it. Bruv, you don't know. I looked at it, I said, bruv, please don't do it. He did it.
That's actually crazy.
And lost. I don't want to say how much he lost, but he lost a large amount. I'm telling you, the only thing I'm confident on is that crypto is not the way. There's always a narrative. It could be NFTs. It could be DeFi.
real estate.
It could be
just come to our to our side of the world.
Real estate is different.
It's there. It's you can touch it. You can take pictures. You can go there. It's
real estate is the only thing which has, in my view. Let me explain my point. It has some staying power because it's the real thing that exists. As in, the industry existed without the token. So you just assess the value on the industry, not the token. My only counter argument is, which is why I'm not really into the whole tokenization narrative anymore. I used to be, not anymore. Is because you don't need a blockchain for it. It's an irrelevant step. You can do it with MySQL database. You don't have to have a blockchain. Meaning, the only thing that gives the token value is the legal tie. That's the only thing.
You are 100% correct, but there are also limitations in the SPVs, and Brother Sam can probably add and agree on that. Like you can't like
a legal limitation.
Sorry,
a legal limitation or a practical limitation.
Both. Because I'll give you an example. For example, and the title deed can only have a maximum amount of owners.
That's a legal thing.
Yeah. And it can have and SPVs also, there are legal implications and legal limitations for that. But when you tokenize, it's just free flowing. It's
exactly. So all they've done is they attach some legal freedom to the token that they didn't give to an SPV. So it's artificial benefit.
Yeah, but you created a lot of liquidity. Now you created a new market because now you basically are able to trade and potentially sell portions that you couldn't have done before, because the SPVs has limitations, and I don't know, obviously it changes from one country to another, but you can't just bring in partners and
it's very
and
strict, man. We're doing one in ADGM right now. It's a lot of
so what I'm saying is that the only difference was made because of a legal difference. It wasn't made because of a practical difference.
Legal, meaning practical.
If I had a MySQL database,
I
and an interface, and they facilitated that on a legal basis, it would be exactly the same. I mean, it is. But let me explain why. Blockchain.
I'm trying to think from a trading point of view. Like, for example, from a trading point of view, if you're in the US and I'm here in the UAE and I want to sell you my tokens here and exchange them for something else that you're selling, like this is where I'm.
Let me explain the basis of what I'm saying. Blockchain can't talk about anything outside the chain.
Yeah.
Which is why I say blockchain only makes sense on Bitcoin, because it determines which address owns the Bitcoin. The Bitcoin is on the blockchain and addresses are on the blockchain. So it only has domain on the blockchain.
Yeah.
The token has domain outside the blockchain, but that's only because of a legal framework, not because of the actual blockchain. Mm-hmm. Because without the legal framework, it's just a useless token. It means nothing.
So this has been an interesting conversation.
So just a conclusion.
Very deep.
Just a conclusion. I agree that it is a benefit to society, the functionality of tokenization, because of legally it has been allowed, but technologically is nothing special.
And I will add just one more thing. It allowed people that couldn't afford to get into real estate now to be able to actually have a chance, and that in itself is a very, very, very big thing. Because again, before, if you're someone that's still low income and you're just still starting in your life, if you have 30,000 dirhams,
you couldn't do nothing.
The only thing you could do is stocks that give you a little dead cent.
But now you're 30,000, you can put it in real estate, in real estate tokens, and those tokens could be worth 50,000 by the end of the year. For example, you take that 50,000, so it lowered the barrier of entry, which was a really big problem in real estate.
Let me give you an example. I'm just going to conclude on this one. In the UK, the land registry wants to have a meeting with me about Bitcoin. How can they put the UK land registry on the blockchain?
So the UK government consults you as well.
One of the employees from them.
Yeah.
So
UK government. He's a wakil. He's the government.
So the conclusion that we came to was that it's pointless. Let me explain why. I said because essentially a blockchain is supposed to be immutable. If I send you the token, I can't stop you. So no one can stop me from sending my piece of the property to you. That's the purpose of a blockchain.
Yeah.
But the whole purpose of a land registry is to have domain to stop that if they wanted to. So you're putting a blockchain in place to remove the powers that you already have. You don't want to have. Imagine I come to your house at gunpoint and say, "Give me your property," and you send it on token to your thing. Now that's in the blockchain. What are they going to do? You can't undo it. The whole point of it is that it's undoable. So what happens in that case?
Yeah.
In that case, they're going to have to come in and do a hard fork and change the code and undo that transaction.
Yeah.
But then, why have a blockchain then?
But then you could have different layers to it, right? Like different security layers, different maybe.
And at that point, it no longer becomes blockchain. It becomes a database. And therefore, just have MySQL.
Yeah, I mean, yeah. There are different nuances to it. I see what you're saying, but I still think it's much faster, much easier.
It is, but I'm saying the key is
you have a very specific use case, and it makes sense. In real estate, it makes sense.
The whole way blockchain works is that you send the transaction to the network receives the transaction and puts it into a block.
Yeah.
And it does so in a way whereby the history is locked in.
Yeah.
Because all further transactions are built on that transaction. But like I said, we have the issue of this token being tied to reality. If someone stole your token, you are still the legal owner, although they have the token. So now there's a disconnect.
Yeah.
And that disconnect cannot be resolved technologically because now the technology says you're no longer the owner, but the law says, but you are the owner. And that's where you have a disconnect.
Yeah.
And therefore, blockchain becomes pointless.
On that bombshell, barakallah fi. Guys, hopefully you benefited from the discussion. How do you find it today? It's interesting, huh?
It's very learned a lot of.
But but
He looks drained with all the thinking. No.
For me, it's very simple, Sheikh. For me personally, 85% real estate.
He went up from 50 to 85.
I didn't say 50, bro. You said 50.
Oh, okay.
You said 50.
No, but you said I second that.
You said
Okay.
at least 50.
Yeah.
So I second at least 50.
Okay. 80, so 85.
For me
can I
personally,
add to that
85%
on the
real
issue of
estate.
property? Can I add to that? I think there is I've mentioned before in the discussion, I think there is a value in having property, not necessarily living in it, but as an asset to
100%.
to rent out and
Yeah.
whatnot, as a means of diversification. Because remember, there's always elements of security there. You can always live in it if you wanted to. I'm not convinced about living,
When you want to finish your point?
And the 15% gold, crypto, and fiat. That's it.
Crypto, you mean Bitcoin?
Wait, what
Now I'm intending to mean Bitcoin.
Gold, Bitcoin, and fiat.
Well, what about startups? You left nothing for startups? Because that's where you could 10, 20x your money.
Yeah, absolutely. And that's what I'm learning. I specifically want to help Muslim startups,
Yeah.
angel investing.
Yeah.
And actually, if I count that, the 85 has decreased a little bit. I have invested, recently quite a few. But yes, that's also something. That's not for everyone though.
Yeah. You're right. It's.
And if you want to find those startups,
I'm investing quite a few from
they're
kids.
inside the cave.
and please don't buy crypto.
Only Bitcoin. Or not even Bitcoin.
We're going to have to bring Ibrahim Al-Kurd in the next episode to defend himself.
Yeah.
I want to dive into the conversation around billionaires, right? So Wall Street Journal has put out an article about how the US currently has 47% of the world's billionaires, right? We can put the chart on the screen. So if the editor cannot forget this time to put it on the screen. Did you guys see the chart? Let me show you. So 47% of the billionaires on this earth, right, are all in the USA.
Yeah.
As in have residency there or just
They live there.
They
That's
live there.
where they
They're
are.
from there.
That's where they are, right? So look at that.
Yeah.
My God.
It's crazy, right? That's crazy. So couple questions that I want to throw at the panel, inshallah ta'ala, right? Why is that the case? Why do you think that's the case?
If it's America, you look at Misha.
Yeah?
So they go with someone else, please.
You hold the passport, right?
Brother Mohamed, mashallah, he did your engineering degree in America, right?
Yes, I did. I graduated from Purdue.
Okay.
Yeah.
He's
But
an American too.
there's actually a very interesting quote about this. I forgot who it was. It was a politician. And she made a comment about the status of billionaires in the US. And she's like, you don't make $1 billion. You take $1 billion.
Interesting.
In the sense that this money that's created is really all speculative, in the sense that this wealth that's created is all speculative because it's all based on futures, speculations on future incomings, future earnings. And it's just becoming more and more and more the case, especially nowadays in the US.
Financialization.
It's just unbelievable. And if you look at all the companies right now, they're all being acquired by a handful.
Blackstone.
BlackRock, and all Vanguard and all these.
BlackRock, Vanguard, and Blackstone.
So it's just the gap is widening, and it's not a normal, like what I'm trying to say, it's artificial. It's really artificial, and it's all based on speculation, which is the definition of, un-Islamic.
So my question here is, because we kind of discussed this in the past, right? So it's not real money?
So I think, Sheikh,
As in these guys are not liquid?
yeah. So if liquid money is considered to be real money,
Yeah.
which Sheikh will have opinions on, but if liquid, for the argument's sake, if
Fiat.
liquid money, if fiat is considered to be real money, then no, this is not real money. What Brother Mohammed said, because if you look at America today, it's all based on their company's valuation, right? The stock valuation.
How much they can get for it.
How much they can get for it. And when you are a founder, CEO of a company, but we have to give credit where credit is due. They have founded the company. And maybe it's not $1 billion company, but it is at least $100 million company, $200 million company, $300 million company. Maybe it's inflated to be $1 billion or more. They have created something great that we all use. Like all the products that I'm seeing in the room is American products. It's an American entrepreneur who did it. Maybe it's overvalued now. That's a different discussion. So right now, this issue, what's happening in America, there's two things that are drawing the GDP, and we'll come to the AI later. Number two is basically building AI data centers. If there were no AI data centers being built right now in America, then GDP would not grow right now. Literally, the single factor that's growing the GDP of America is building more data centers. But we're going to come to that on the AI topic, Sheikh, right? Yeah. But another factor here is people are becoming accidental millionaires, right? Through their stock valuation. We're going to talk about crypto, and through the real estate getting inflated there. So everybody, when the real estate gets inflated, for example, you bought the house for $400,000 in COVID. Now it's $900,000. That $500,000 is not tied to the house. He's going to the bank. Bank is creating new money. He's doing cash out refinance. He's taking more cash out of the equity. So now he has more money to spend in the economy. Also, the same thing, these stocks getting overvalued to a certain point, they can take loan against the stocks, or they can sell the stocks, and they can leverage the stocks so many ways, and they go in the market. So if you look at 60% of consumer spending, when you look at the GDP of America, 60% of consumer spending is done by 10% of the people.
This is interesting, right? Because obviously at the time when Elon Musk bought Twitter, he was the richest man on earth, right? Or one of, you know, and he bought Twitter for how much?
40 billion plus.
40 billion.
44 billion, I think.
But
Not entirely, but it was him and others, yeah.
But he took out a loan.
Yeah.
He took out a loan.
Against his stocks.
Right, against his stocks, right? So that's the first time he hit me. I was like, wait. So these guys aren't actually liquid.
Rich,
yeah, it's not. Or even like asset rich.
Yeah.
Well, I guess it is an asset. It is an
I think they
asset.
call it paper rich.
Paper rich.
Yeah, exactly.
So the reason why that stuck out to me is because I was looking at this article on Forbes Middle East, and it talks about the billionaires that are inside of the GCC region. It's not a lot, man. There's 20. Sorry, there's only 12 in Saudi Arabia, 6 in the UAE, 5 in Egypt, 6 in Lebanon, 2 in Qatar. That one shocked me. 3 in Morocco, 1 in Algeria, 1 in Oman.
Stop laughing, Sheikh. But billionaire by whose standard? Like who's measuring?
Right. So that's what I was going to ask. Right. So, but the thing is, but here they just seem like they've got so much real money.
Yeah.
Right.
That's a deep question.
It seems like they've got so much real money, and we know, as a matter of fact, debt is very low here.
Yeah.
Right.
Yes.
Debt is extremely low here. I think in America, 80% of
here only 17% are bought through mortgage houses. Right? 83% are.
So this is real money. When you see all this construction, everything happening and so on, this is real money. So what is the measurement then? Like, what is the metric that actually measures a person's wealth?
I think you have to also recognize that even what you mentioned about that the percentage, it's about how they measure things. So if you also include debt as an asset, that also can change the way you view things, because we might say, well, debt is a liability, but for some people, a debt could be an asset. That would be something as a positive on a balance sheet. Also, there's financial engineering, which again we might touch upon in the AI thing. But basically, there's a way you can structure your balance sheet whereby you can actually hide certain things, and so it's all about, like I said, financial engineering. I mean, even like the 2008 bubble, the housing bubble, that was largely part of over-evaluation and speculation, like I've mentioned. So it's if in the grand scheme of things, from an Islamic perspective, if you looked at exactly how Western companies are or people, individuals are deemed to be rich, and like you mentioned how in the Middle East are deemed to be rich, you probably find it's very different.
The reason I ask this here is because, obviously, we know, as a matter of fact, that wealth is leverage, right? And we are encouraged to, use our wealth for good and seek refuge with Allah from poverty, and to ask Allah for rizq, and ultimately do good things with that wealth. And the more money you have, then the more good you can ultimately do, right? With Allah's permission, tawfiq. Not to say that person has that money can't do good, but that's our ethos. We want to do good with the money. And you want to make as much as you possibly can, so you can do as much good as you possibly can. But if being a billionaire requires you to have these massive amounts of debt and these speculative kind of, speculative
instruments
to kind of assign billionaire status to you, then maybe billionaire is not something that's really a viable goal for Muslims. Maybe it should be like centimillionaires or decamillionaires.
Yeah.
Like what is the equivalent of, I mean, take debt away from us, right? Like let's assume there's no riba, there's no debt, it's all real hard assets. What's a number that we should be, aspiring to have so that we can have that global level impact?
I actually asked myself that question the other day, and when I asked myself that question, I sort of changed that question into something else. It's what's the real economic value that allows me to leverage that to become a decamillionaire or something? Because in its essence, if you look at Islamic financing or Islamic economics, every single thing has to be tied to some sort of economic activity. It has to be something that has real asset, real value, and that is exchanging hands. And this speculation, to answer your question, why we don't have as many billionaires here, is because this speculation is not very common here. This financial instruments that you see in the US are very rare here. So that's why people's wealth is tied to some sort of real activity and real economic value, as opposed to the US, where it's all based on speculation. And there, the idea of making money is very common. Here, not so much. You have to actually offer some sort of value so that you'll be able to reach a status of economic wealth, as opposed to the US. That's my take on it, because you don't have any other option here. You have to do something. You have to either sell a service, trade, or do something. Otherwise, you won't. Yeah, you're gonna have nothing to offer.
What are your thoughts, Nisra?
Yes, along the same line, because if you look at it from the GDP perspective, starting from there, US GDP expands with debt. And Ray Dalio always talks about it. Their GDP is so big because they have so much debt. Every time we put $1 in the bank, and the fact that the bank can loan out $9, that becomes like a $10 GDP at that point, right? But it's actually $1 in the bank. Now multiply that by so many times. And same thing, the house example I gave in the US, the guy has $400,000 equity because of the COVID rush. Now he can go to the bank and take 80% out. He can take $320,000 out as cash and then go back to the economy and spend. So it's all, and then everything can crumble when the house price goes down and everything else. So everything it's a house of cards based on debt. And even when I came here first time personally, I was like, okay, we're gonna lease this car. Like I'm talking about long-term lease, because that's just a culture in the US, right? Because I'm not a big fan of like any sort of vehicles. And for me, cars don't make sense to spend so much money. Like, let's go lease it. Then of course the contract and everything I learned, there's like so much things to look at. But the fact that they actually did not even have, I'm talking about 2-3 years, like why lease a car? Like just get what you can afford, buy it, and khalas. I'm talking about like long-term leases, not renting for the car rental place. But in the US, it's so common. Like just lease something you cannot afford. You're paying $2,500 a month, $3,000. That's just the culture.
It's leverage.
Yeah, it's just leverage. Everything is leverage. You're looked down upon if you don't leverage. Like you're just a dumb person. Why don't you leverage?
Here's the opposite.
Here's the opposite. People look down on you if you're leveraged. By default, people assume everything you have, you actually own it. You own this phone, it's not leveraged. You own this car, it's not leveraged. You own this apartment that you live in, it's not leveraged, right? So it's a complete different culture and mindset. But I think that's where the barakah and the victory is, Sheikh, right? I think because we don't believe in the numbers, we don't believe in what looks on the paper. I think the barakah comes from this.
And barakah is very important, right? That's very important, because these guys can be billionaires, but a person who's got a few million, but barakah inside of it, Allah barik, it can go a lot further than a man's millions.
And we're not going to name names, but one of the richest guys in the world, he does not know if his son is a daughter or daughter is a son. Like, it's like a man, woman, man, like he's super depressed and so many other things. He's on pills all the time. Like carries like with him how many pills, God knows, like 25, 26 pills a day. He's on drugs. And he's one of the richest men in the world.
And he still has to take out a loan to buy X.
Yes.
So let's move on to AI.
Yes.
Are we in a bubble here? Is this real? Like, because right now Nvidia is
5 trillion.
5 trillion, man. That's crazy. It's so the in terms of American the companies in the S&P 500, the overall majority of them are tech companies, and 1/3 of the value of all the tech companies is Nvidia. Do you know what I'm saying? Now, with that said, we've got this guy Michael Burry, and you're going to talk to us a bit about who he is in light of this alleged AI bubble, has decided to shut down his fund, right? So we're going to dissect this, inshallah ta'ala. But Sheikh Mohamed, what do you think, man? Because
I mean, the thing is, AI, I think you have to kind of define what is meant by bubble, in what aspect, in terms of
Stock valuation.
the stock evaluation.
Yep.
Because there's different facets of it. There's the buzz around using AI. That's a whole thing in itself. And I think there is, in that perspective, there is definitely a overestimation of AI's capacity. And I don't know if you share this view with me, but when AI first came out, I felt as though in some ways it was actually it did more. When it first came out, it was able to probably do a few more things than now. It seems to be almost dumbed down a bit. I don't know, but
it's limited. It's now you cannot ask for legal or medical advice. The newer ones now, it's mad. They'll give you just some bullet
I did
points.
not see that, man. That's a new update.
But
because it was causing a lot of problems and legal implications.
Yeah, I think there is some of that, because I feel that now you almost have to do a lot more asking than to get exactly what was before. It was more general. But put that aside, that was one element of that, and that also affects companies, because I think there was, or probably still is, this idea that a lot of what you could do could be replaced with AI. And I think what people realize now, that actually no, it can't. But it might be able to help my staff do something more, but they can't replace staff. But in terms of evaluation, I think Bloomberg came out with a report the other day, kind of highlighting where the money is kind of going around in circles. Essentially, that's what it was kind of evaluating in that. In a nutshell, in summary, Nvidia seems to be supporting a lot of companies financially, either through loans or using SPVs to try and hide investments or not, for them to essentially buy Nvidia product. So essentially, they're giving them loans to buy their own product. But because they've hid that loan in some kind of SPV here, it doesn't show up as a loan or anything like that. It shows up as equity, and there is definitely a lot in that, because I think, I think that's what's said in the market, is that there's this vision that AI is going to be this big thing, where to this day it hasn't been proven to be profitable. No one's making money yet to this day.
Really?
Yeah, no one's making money. As in the amount of money they're burning through capital to get these
chips on.
First and foremost, to train these models.
Nvidia's not made money?
No, talking about OpenAI and these other
OpenAI
companies.
has not made money.
No, they're not making money. As in, even the paying customers, they're not making money even with them.
Wow.
Yeah, I wouldn't be surprised.
So essentially, what's happening is that they are betting on the profitability coming.
Yes.
In the future.
Yes.
But as it is right now, number one, most people don't actually pay for the AI. I mean, do you guys pay for the ChatGPT? I mean,
I
just
do.
use. Yeah, well, I don't. So that's number one. Number two, some actually run their own local AI, local LLMs, which is not mostly people, but it does happen. So it's not that profitable yet. So because of that, because number one, it's not proven to be a profitable business, yet they're burning millions or billions, not millions. We're going beyond the millions now. They're burning billions in this market. That's why I think there is definitely an element of it being a bubble. And one last thing I want to mention, I think I mentioned someone else, which I think we should always touch upon. AI is technology. The nature of technology is that over time it becomes more efficient.
Yes.
It gets cheaper to do the same thing that you could do last year. Therefore, your margins get more and more thin as time goes on. I mean, even your iPhones, when iPhone first came out, it was amazing what you could do. You know, pinch to zoom, that kind of stuff. Now everyone can do that. As in, there's not much not much value you can squeeze out of an iPhone to justify the valuation. So AI, being tech, over time, the margins are going to get thinner and thinner and thinner and cheaper and cheaper and cheaper.
Are you familiar with Jevons paradox?
Explain.
So Jevons paradox, you guys familiar with it? So basically, it's what you just said, right? Is that as technology becomes more efficient, it becomes cheaper, so the money you make from it is going to be less.
Yes, it's deflationary.
Right, but that assumes that the same amount of people are going to be using it. But actually, what actually tends to happen is that when it gets more efficient and cheaper, more use cases arise and more people can afford it. So actually, you end up making more money from it.
Okay.
You end up making more money from it. So I think this is the conversation right now, is a Jevons paradox going to occur with AI? Because if it does, these guys will break through.
Yeah.
Yes. Hence why like the investment is that at some point,
because like now everyone can get a smartphone. Back in the day, it was if you had an Apple phone when it came out in 2006, 5, it was you're okay. These guys got money. You know what I'm saying?
But I think the problem we have right now, which I think is beginning to surface more and more now, is that people are realizing that AI actually isn't what they thought it was. It's not actually delivering necessarily what they want. Especially there's the people complaining a lot with AI slop. They complain. I just saw just this morning actually that for the first time, 52% now of internet content is now AI produced.
Really?
Yeah,
52%.
So they're worrying now that it's actually going to. Have you heard of the death of the internet model?
No.
So the death of the internet basically means that when already before AI, the problem we had with the internet was bots. Many platforms were overrun with bots. Now we have AI. It's even worse, whereby what you can produce is now quicker than before. So, for example, Amazon is becoming now, just this year actually, becoming a phenomenon, whereby people who publish books, almost within weeks, 5 to 10 to 20 books on the same name are being produced and put on the same thing.
Yeah.
A book about the book, or a book, another version of the book, or a book, because people can just now take the same thing, AI it, and then put it on there. And as long as you get like 1% of the market, you're still making money.
Can I ask you guys a question, yeah? Do you ever get people sending you like AI notes? Like, let's just say
How do you mean notes?
Okay, so in my team, yeah, let's just say I've told someone to do a task, and I can see just ChatGPT, right? It could be notes to like it could be a brief for a podcast.
Yeah,
it could be a proposal.
Yeah.
Have you seen that?
More than that.
So me personally,
how many times you got?
I turn off, and I don't ever read that stuff properly.
Yes.
Like, the moment I know this is AI, I just don't even read
Switch
it.
off.
Yeah, I switch off.
Yes.
I switch off.
And that's AI slop. That's a problem.
Is that okay? That's what AI slop is.
That's
so
not just that. AI slop is basically where you can tell. It's like that uncanny valley where you can tell it's not by a person, so therefore you no longer care about it.
Yeah.
Especially like YouTube, it's a big thing now. YouTube, click on a video, you hear that voice, you just know it's AI,
so you just turn off.
So you just turn it off.
Interesting.
I mean, I'll give you a small example, and Brother Sam can definitely add on this. When in construction, I'm just using a very small example to sort of draw a parallel.
Yeah.
When you had to make a building, you had to make blueprints, right? And back in the day, you had to make blueprints manually. You know, you have to draw them, and they were like big drawings,
Actual
and they're called blueprints because the drawings were actually blue.
Yep.
And you would have like a big hallway of just tables and engineers just sitting, and they actually go to university for 3 or 4 years just to learn how to become a draftsman. When AutoCAD came out, they're like, oh my God, no, this is going to take over, and this is going to destroy us, and this is going to, like cause a lot of problems. What ended up happening, it just, as Brother Muawiyyah said, it's just made the process more efficient. So you still need a draftsman, but instead of like working in a hall full of like 50, 100 other people, you can now do the same thing with maybe a team of 5 or 10 or 15, but you do it on a computer, and it's much faster. It's more efficient. The quality of the drawings is higher, and then it's just faster. So
you can look at it 3D, you can rotate.
Exactly. That economic value that was created by AutoCAD generated another sort of economic value. So what I'm trying to say is that that's
Jevon's paradox.
Yeah, it's just basically AI will not take your job. Someone that knows how to operate AI will. So it's just always goes back to the human being. Yes. How am I using this technology to create other economic value? So basically, I'm creating maybe a new domain or a new efficient way of doing things or a new sort of business. And that's exactly what happened in construction. Draftsmen didn't go out of jobs. They just basically became less. And maybe the other people that wanted to become draftsmen now decided that maybe they want to do engineering or civil engineering or project management. So it was just a shuffling of cards. And that's exactly what AI is. As Brother Muawiyyah said, human beings are always going to evolve in technology. You either catch on to it and you become really good at your niche and you try to like perfect your craft, or that's when you're going to be left behind.
There are definitely areas where AI enhances what we can do. And I think the problem is that when people try to use it to replace what we do. I think that's what you mentioned about the AI, we need to switch off. The reason why he switched off wasn't because he used AI. It's because he ceased to think when producing that content.
Yeah, that's the issue.
If he used it as a blueprint and then customized it for himself, you'd appreciate that. It just made him quick. For example,
that's what I do.
Yes, if you said AI, give me a template, and you work from that template, you've made life way easier.
100%.
But when you say, give me the answer,
that's it.
You see it straight away. And I think the future of AI will be more about autocorrect. How autocorrect makes you have to worry about how you spell, but you're still creating the content. I think that would be where AI is. So, for example, I want to make an app. I have to make assets for the app, the pictures, whatnot. Yes. I can use AI to quickly make the assets, so I can now get back busy with the actual development.
Garbage in, garbage out.
Yes.
It's just...
So, but if you just say, "Give me the app," and that's where you have the problem. So there is definitely benefits. The only issue is the amount of computing power it takes to make this stuff. The energy required to produce this stuff, it requires a lot of input. So they haven't really managed to squeeze out enough value from it so it actually covers its cost. So that's the problem you're going to have, which is the opposite of Bitcoin, by the way, but we'll talk about another time.
The thing that concerns me about AI is that obviously it's technology. It's making things more efficient. People are doing things faster. They're doing things more accurately. People who know how to use it are leveraging it for a bunch of different things. And it's very, very connected to data. You know what I'm saying? Like AI requires data. The Muslims are really behind though when it comes to the AI thing. And it just kind of even seems a bit overwhelming. Like, where do we even jump in?
You mean the Muslim individuals or like the governments? Because the governments here...
So here's different, right? Here they got G42.
Yeah.
They're really trying to push a lot when it comes to the AI space. But it just...
But you know why that is though, by the way?
Why?
So, interestingly enough, there are different tiers when it comes to AI chips that they're allowed to sell to. There are those you can buy infinite amount of chips as you like.
Yeah.
There are those who have quotas that they can still buy chips, but they have quotas. I think it's 50,000 chips.
Based on how powerful they are, right? Based on how powerful they are.
No, relationships.
Okay.
And then there are those who can't buy the latest chips, like in China and in Russia and whatnot. So countries like Middle Eastern countries are in the mid-tier where they can buy chips. But the quota they have is way more than they would use. So they can leverage that by buying and then selling on to those who can't leverage it. So there's actually incentive to be involved in that, not just for themselves using AI, but as a reseller of AI chips to other countries.
Interesting.
So that's a big avenue.
I also have a different take on it. I think it's also a national security sort of interest in the sense that when you have all of these chips in your hand, from a national security perspective, your reliance on external forces, external companies, external individuals who you don't know where the allegiance is becomes a lot less. Yeah. So now you just have to rely on a machine, which is okay because a machine is a machine at the end of the day.
I mean,
so I think
and it's your machine.
Oh,
and it's your machine.
Exactly. So I think there's also a very big part of it is national security and just strategy in general, which is also very smart.
The national security thing is an important thing because there's an element of that in terms of actually using the data, using the AI. So if you make an app that uses AI, when you make the requests, where does that request go? Now, some countries like Saudi Arabia have actually stipulated that if you're going to run an AI app from Saudi Arabia, you have to have it locally hosted, meaning that the data can't leave the country.
Interesting.
And now many countries, not just Saudi, many countries have had that, made that stipulate. Like the EU specifically, they said that if you run a country, if you want to target EU citizens as a customer, you have to host you use EU data centers. You can't let that data go abroad because now it's a security risk. Like even I know an individual who works for 3M company. This is way back when they were talking about AI. And I said, why don't you use AI in your company? And he said, the main reason we don't use it, this was back then, don't use it because of data. We don't want our secret proprietary data being shared on some server and they can basically just take it. We don't know what to do with it. So they had a concern of actually making a locally hosted LLM. That was what they wanted to do because of that issue of privacy. So imagine America sending data with China with DeepSeek. That was a big issue when DeepSeek came in. There's how can we use China? The CCP are going to use our data and spy on us. That's a big issue as well with AI. That's why a lot of countries want to host things locally because of that. So there's avenues.
Beautiful. So is it a bubble though? Is it overvalued? We are in terms of the use cases, but is it overvalued?
I think from a stock perspective, if you look at Nvidia, the question is
stock, but also I guess it would come in like people want to invest in startups that are
so basically Nvidia is currently the example people use, the .com bubble. Is it like another Cisco? Because Cisco was the company that was distributing 80% of the routers when the internet tech bubble happened, right? And when they dropped, like Cisco's took the biggest hit because it was providing 80% of the routers that you needed for internet. So the question is Nvidia the new Cisco? Because it's providing the majority of the chips, right? So that's one way to look at it. Second thing people question, NVIDIA's major customers are just those 5 to 7 companies, the Microsoft, Meta, Alphabet, and a couple of others. That's it. And that's why they have to give loans to the smaller guys so that they can buy from them, right? Not everybody can buy. But on the flip side, so that's one argument. Or another argument people use that it is a bubble is that the price earning ratio. If you look at the price to earning ratio, currently NVIDIA's is at 40, and that's historically very high. Price earning ratio is basically how much a stock, like whatever you're paying for the stock, $1 for the stock, how much it actually makes in return. So 40 is historically high. Anything between 16 to 25 is low, 25 to 40 is moderate, and starting from 40 is high. So NVIDIA's is at 40. So it's already like very highly valued stock. So $5 trillion is a very high valuation. So investing in NVIDIA itself, on the chip itself. And another point, quickly I want to mention, the power that Sheikh Muawiyyah mentioned. So I was reading a Saudi article. They said Saudi Arabia, just to meet the demand, just Saudi Arabia itself, to meet the demand, they have to invest $240 trillion in next 5 years in power.
Trillion.
240 trillion in power.
My
just
God.
in power, bro. To supply this AI need. They said they have only
the
power that AI needs.
in Saudi.
Yes, just in
in
Saudi.
Saudi,
Just
wow.
in Saudi. For this everything to keep going. And they have only invested 3 so far.
And then also just add to that, because the data centers, they require near zero downtime. They can't take time minutes off, so they actually pay a premium on the power that they have. So with big power consumers, like for example Bitcoin mining, they can have downtimes because they only pay for what they use, so it's not a big deal. And if you switched off or switched on, it doesn't stop their work. With AI, you can't have moments where it's not working. It needs to be functioning. So they actually pay a premium on the power that they
So
use.
this issue of power seems to be, like, to me, the biggest argument
Oh yeah,
that
1000%.
that AI could be in trouble.
Yeah, so
Because
the other way to look at it is power is like the modern day, at that time, how for the gold, it was what? The X and the chips, whoever provided the X and chips. Now for the AI, whoever can provide the power from that angle. So some corporations and countries are looking at how can we be the leaders in providing the power. Not necessarily the AI technology itself.
And it becomes, I think also another part of it is the reliance on the human factor and the variability of the human behavior becomes a lot less, which is a lot better for governments that are trying to maintain the status quo, because then you're like, I have a machine that can work 24 hours a day, no complaints,
No leave.
specific targets. That's it. This is what I want. And then my reliance on this segment, I can just really focus on a specific segment of society to do a job a lot better than I could have done before.
And I think one of the biggest concerns, I think, that is some people are mentioning about the data center issue specifically, is if they even need that much power. They're investing a huge amounts of money to build the infrastructure to service that. And then they have things that shake up the system like DeepSeek, which proven that you actually didn't need all that power in the first place. They can actually do similar results with a fraction of the power.
So that's the scary part of the bubble. That's the scary part. Because at the end of the day, it's technology. Now you're thinking you need all this power. Watch another guy comes in 10 years like bro, we don't need even all this power. So what happens to then, like all these power centers and data centers built? See, that's the issue, Sheikh. Because everything, you don't know what you don't know. Because it's a technology, it keeps evolving.
I remember,
It's scary.
by definition, gets cheaper over time.
Yeah.
It's scary because what you said is 100% correct. Right now, some of the top developers, without naming names, in UAE are investing heavily in just in data centers. So they switched their business model completely from real estate to data centers because of the amount of money that can be made. But then again,
oversupply.
Like you said, in 10, 15 years, when the technology changes again, what do you do with these data centers?
Yeah.
It's like what happened with Detroit, like when there was that big boom for automobiles, and then you ended up with a ghost town after a specific amount of time. It's just, it's very, very heavily, it's very capital intensive, but the thing is, what's the next step after that?
And everything is interlinked, Sheikh. Last point from me, everything is interlinked. Because NVIDIA is reliant on those top 5 to 7 companies. Those top 5 to 7 companies, the Magnificent Seven.
NVIDIA.
On NVIDIA and their investments and the government investing on the data center. So
then
now
all of them are dependent on power.
yes, all of them are dependent on power for now, right? Now, the last thing here, all the governments, not Saudi Arabia, like all the other governments, even US and other ones, Western ones. Okay, so how do we raise so much money that we need to provide this amount of power? How do you raise them? Issue bonds. right? More debts. You understand? So it's not only AI. So it completely
that's
explodes.
trashing the dollar.
Yes, so it implodes like crazy.
So this is a real race, man.
I mean, the thing is, if you look historically, it's the same cycle over and over again. The dot-com bubble, the real estate bubble.
It's just a different instrument.
It's just a different instrument.
Even the arms race, man, back in World War One.
Yeah.
I mean, if you think about it, it's just a symptom of the same disease.
Yeah.
They're just chasing yield.
But this is an arms race, exactly. It's an arms race for cyber power, basically.
Yeah.
And back in the day, it was just bullets and guns and airplanes and tanks. Now it's cyber power. It's how can I how can I control or protect my risk, my security from a risk, way it even comes close to my border.
But they also use this stuff in kinetic warfare as well.
In
Kinetic, actual like combat.
yeah,
right?
psyop. By psyop, because like he said, there was a very interesting point that he mentioned. Obviously, for example, OpenAI doesn't make money because the real value is not in the subscription. In the subscription, the real value is in all of this information, these patterns, this human behavior that it's collecting over days and months and years, just the same way Facebook was not making money for the first 8-9 years. It was just collecting data.
Even Amazon
collecting
Amazon
data
over a decade it wasn't making money.
14 years.
and then they use all of this data to sell products back to you based on your patterns. So it's the same exact thing OpenAI is going to do.
Which is why I never use ChatGPT.
So I'm just trying to, I'm just trying to think of opportunities for people, right? So someone might say, look, I don't have a technical background. AI is not my thing. But you're saying data centers in terms of real estate is lucrative right now?
I would proceed with caution.
Yeah.
I would proceed with caution. When I say if you are a institutional level developer, you have government contracts, connections, then maybe. But if you are mid to even large size without any government backing, I wouldn't jump on it just because everybody's doing it without having proper data.
What about generating power? Like what are we talking coal? Are we talking solar? What are you talking about?
Renewables or liquid. Again, government level stuff.
It's usually outside the scope of like a normal person.
Yeah.
Power generation. But what I'm bullish about is
this podcast not for normal people.
there you go. What I am bullish on
it's not for normal people. There's ministers watching right now.
what I am bullish on
No,
though
being
is
serious. Minister, please comment.
what I am bullish on though is robotics. I think robotics is probably an avenue of AI which people are not really thinking about too tough, which I think would be more meaningful if it can be useful. I mean, I think seeing what's coming out of China, some of the stuff that they're pulling off is really positive.
Yeah.
Especially in terms of like healthcare, just simple things.
They launched some new robot, or something today, this morning, right?
I don't know this morning, but China's they're, in terms of manufacturing, they're on point.
So, and also on the power topic of generating power, China is now producing more power than all of Europe.
Oh yeah. They invested heavily on power generation.
All of Europe. Do you know what I'm saying? So then they might be behind the AI race in comparison to America, apparently. But if they got that power,
well, it said that they're behind ARS, but I remember there was one guy who mentioned that they're at least 2 years behind, and then that was like a few months before DeepSeek came out, and then that just shattered his whole model.
Which country was it in South America that is almost 85 or 90% running on renewables? Costa Rica, I think. It's Costa Rica. There's
I know Pakistan is up there though. Coming.
There's a new startup in Pakistan. Yeah, we're gonna sidetrack, but I'm sure Pakistan's doing some stuff. Yeah.
Pakistan is.
They did some agricultural startups.
There is some opportunities happening in Pakistan.
I didn't know it's up there in terms of renewables.
Because what happened was, one brother told me what happened was because power was already intermittent in Pakistan because of power generation. Because the issue in Pakistan wasn't power generation; it was getting that power to where it needs to go. So people had issues. So some people gave up waiting for the government and started install solar panels themselves. As a byproduct, a large number of people, households, are now fully powered by solar panel independently of government. It wasn't a government initiative, it was just them dealing with it. So because of that, Pakistan is one of the leading countries in adoption of renewables because of that thing.
And I suppose those type of countries, if a person wants to, for example, transition into like a business model where they're generating power and stuff like that, countries like Pakistan, I presume Bangladesh would be easier to get into.
Yes, Sheikh.
The main issue is regulation, though.
Say again?
The main issue is just regulation.
Yeah.
Interesting.
How secure is your investment and how many hands you have to grease to get these things done?
So do you want to wrap it up with the Michael Berry position?
Yeah, go for it, man.
Yeah. So
Michael Berry.
So you guys know Michael Berry?
No.
Okay, so Michael Berry, he's famously known for The Big Short. Okay.
Oh, okay.
Yes.
No, there you go. Now I know. Yeah,
yes.
I didn't know him by name, but
Yes, so he's a real personality.
he's autistic, right?
Yes, bro.
Okay.
He's really autistic.
Really?
Yeah.
Yeah,
But
yeah.
he did The Big Short, which is basically he shorted the mortgage-backed securities in America before the U.S. recession. He called out like all of these companies, Lehman Brothers, all of these companies are going to fall. And he shorted their stocks. Of course, we can get in the discussion. Most scholars say shorting stocks is completely haram. But I'm just saying, just for the argument's sake, he shorted the stocks and then he was right. And that's why it's called The Big Short. Now, recently, he has shorted NVIDIA. And that's why this whole discussion we're having today, is it overvalued, what's happening? And few others, many others. So with his fund, you have to basically, the SEC requires any shorts amounting larger than $100 million. It has to be like publicly reported. So the ones only above $100 million, those are the ones we know. We don't know any ones that he have shorted like the total amount to be less than 100 million, but he has shorted many of these AI chip providers, AI stocks.
That's a big statement.
And when Michael Berry shorts something, everybody listens because everybody has that fresh memory from 2008. Like, we should have listened to this autistic man.
Because this autistic man did something crazy. Like when he shorted, he didn't just do it just out of like just pure analysis. He actually went and got back in 2008, got every single real estate transaction that you could think of. And literally went and sent people to investigate who the hell was living in that house. And then he found that there was
a hooker living there.
There was a hooker.
Yes, there's a
that
guy
had 2 or 3 houses. There was a house registered in the name of a dog.
Yes.
What? It was so it was like the Wild Wild West.
All before AI, Sheikh. All before AI, the man knew how to do research.
Yeah, he did research, yeah.
So actually, if you think about it, his approach was quite halal in the sense that he actually
did the research.
Did the research,
sure.
and he shorted based on data and actual numbers and not just speculation.
Yep.
But the fact that he shorted against
now, Sheikh, what do you think is the angle for Muslim founders who are in the position, who are employers, who create jobs? Because a lot of AI is actually taking a lot of entry-level jobs, like a lot of accounting type, reading report type, clerical type. It's actually taking away jobs. So is there a responsibility? Because I have read, from Harvard, 23% people who graduated this year, 23% of them are unemployed for 3 months plus. I don't know how many Muslims are there, but there will be many Muslims because Muslims are, mashallah, very educated in the US and they go from all over the world. But the question is, I think there should be responsibility from both sides. Of course, as Brother Mohamed mentioned, their responsibility is to be great prompt engineers or whatever it takes, basically, to learn how to operate the AI itself. But I think, as Allah has blessed me to be in a position where I can, inshallah, get people on board on the team. I feel like it's a responsibility for us to look out for people who are possibly like 22, 23-year-old and just don't know what to do. Because it just overnight changed. I don't know what you guys' opinions like. Overnight, it changed for them.
There was an interesting statement one guy mentioned about that exact point. He said he made a phrase saying that AI disincentivizes companies from paying you to be bad at your job. Meaning that normally, what's the purpose of an apprentice or someone you train in? Is they're already bad at their job.
Yeah,
you pay them a nominal wage, but part of that is you're getting training.
Yeah.
Why would I do that now? Because I can just get AI to do it. It harms the apprentice. It harms the one who's learning, like you just said. So that is...
Yeah, but this is where the whole concept of looking out for your people comes into place, right? Like, if you don't look out for the Muslims and you don't upskill them and you don't facilitate these things for them, then in the long term it will harm you.
Like, that will be an issue. Yeah.
Yeah, I mean, look, if you're a capitalist...
But if you're forced to do angel's advocate, one can argue, okay, look, my company is struggling. I need to tighten the belt a bit.
We're not talking about the guys that are struggling. I'm talking about if you're not struggling. And
so you're saying sadaqah basically then?
Sorry again?
You're saying it'll be a sadaqah then?
Yeah, but I think, look, the thing is this, right? Once a person's got 10 million in the account, 20 million in the account, liquid, bro, you made enough money to live, bro, and not have to work another day. So why are you working? Like Elon Musk, this guy is not working because he's trying to make more money, like we said. The guy's just playing, I mean, he's taking out loans, despite being the richest man in the world, right? But there's something ideological behind what they do. So why can't we be ideological? You know what I'm saying?
I mean,
we have to look out for our people. We have to. If we don't,
100%.
What's going to happen is that one day we're going to wake up and, the Zionists, they're in charge of AI. They probably have all of these things anyway. Then we're going to regret because we didn't look out for our people.
Have you heard of this woman on Instagram that really became so famous in the last, I would say, few months or 1 year? Called her handle is at Future of Education, I think, _ Future of Education. Basically, it was a woman, a mother that was fed up with the traditional way of schooling.
Okay.
So she's like, you know what? I'm going to do my own school, but I'm going to have my school based on AI, high school, like from elementary all the way up to like senior school, and a few other unorthodox things. People challenge her. They're like, your kids are going to be dumb. They're going to be reliant on AI and all that sort of stuff. Her students came out to have the highest SAT scores in comparison to conventional students, because from a very early age and from a very early year, she taught them how to basically do things that AI facilitates. And a lot of them had running businesses by the time they were 15, 16 and making a good amount of money. So it's just really our responsibility on how we can make our kids adapt quickly to those tools and teach them at a much faster rate than they would.
I'll give you another example, right? Just to back up what you're saying. Stephen Schwartzman, why did he invest? Why did he donate? $200 million?
China, right?
No,
Shanghai.
MIT.
MIT,
The
yes.
AI lab.
Yeah.
Tax rebate.
Again?
It's for tax reasons. I don't know.
I'll be honest with you, bro. These guys are they're ideological, man. They're looking out for their country. They're looking out for their people. They wanna. They understand, right? That AI, they can't slow down that race. They're gonna lose every.
Oh, so sorry. Go ahead.
sorry.
No, finish the point.
No, I'm saying if everything's going the direction of AI, the country, if it loses the AI race, then what's Blackstone? What does it benefit? What does it benefit if America becomes, it's not a superpower in the world anymore? Do you know what I'm saying? So I'm saying if those guys can have that foresight, why can't we?
100%. Such a deep point. And that's exactly the point which Brother Mohamed and you mentioned. This is exactly my point, Sheikh. So for example, right now, what NVIDIA is doing, they started just doing it, and I think other companies will follow suit, is basically they're saying, literally, we'll hire high school graduates with good SAT scores. Forget the graduates from bachelors and MBAs. Waste of time, waste of their time, waste of our time hiring them.
Really? I didn't know that.
Literally, bro, recently.
Wow.
We'll hire high school graduates and we'll put them through 4-month apprenticeship. Whoever passes, because all we need is smart kids from high school. All we need is 4 months with them, not 4 years with them. All we need is 4 months with them, and we'll teach them what we need. And whoever learns what we need them to learn, we'll keep them. So my question is to myself and all of us in that position, we need to start thinking that way for our Muslim brothers and sisters, right?
And start with our kids.
Exactly, bro. Take them from high school, get in an organization, and some skills, at least that I see not in the near future, will be replaced by AI. You cannot have an AI raise capital, a $500,000 check to a $5 million USD check. It happens only through this. Through this. Building the connection, the person actually knowing you as the driver, going on a yacht with you, going on a dinner with you, long journey with you, actually understanding you, not only the company and the financials that probably AI made the pitch, right? They want to know you. 100%. You're the driver. Where are you going? Tell me where you're going. Prove it to me that you're going to go there. Sell me your vision. So AI is not going to do that. So we need to teach our kids and our younger brothers this type of skill, human relationship. Last point on this, Sheikh, and sometimes I have seen, they don't even know the skill they have. Like I'm meeting a lot of engineers that have a lot of good relationship characters. Like, mashallah, Brother Mohamed, right? Because usually engineers are analytical type of people. They don't have good people skills, right? But when you meet an engineer, and let's say whatever field they're, mechanical engineer is outdated in Detroit now. It's electronic, EVs and all that, right? So they did mechanical, they did the right thing. They pray 5 times. They're good kids. What do you do with them now? The mechanical engineers outdated. They can't find a job. But when you talk to them, man, their relationship skills are great. So you show them path that they can pursue. 100%. Bro, people will trust you because you have committed to something and you have finished. You have graduated. Now people trust you. Work for my company. Raise capital. Let me teach you.
100%.
It's completely outside of your field, but trust me, you're going to do good. Because they don't even know that they can do good. And I'm just saying from my field. No, 100%. Right? But I'm sure in every industry, there's so many fields like that we can fill.
100%. And if you don't do it, you're only going to regret it in the future. Because you wouldn't have built that. You won't have that Muslim infrastructure. I
mean, most of the people that graduate from university don't even end up doing what they studied. If you think about it.
100%.
So how is it different than this?
How's it different than this?
it's the biggest risk.
It's the same thing. You just have to pivot.
more organized, actually, this way.
Exactly.
Yep.
Maybe you just have to pivot, and this is exactly the flexibility that even Islam encourages, that you need to learn how to adapt, because as Arabs or Muslims, we're kind of nomadic in nature. We're all over the place. We traveled all over the place. We've reached Spain. We've reached all the way to Southeast Asia. So we had to adapt.
Yep.
It's in our blood. It's in our DNA. We cannot be like stuck to a specific set way of doing things. We have to adapt in the land that we're in, and this is no different than what Brother Sam has mentioned.
Barakallah feek. Let's move on to Bitcoin, inshallah. So
The king of Bitcoin.
Yes. We'll just listen and obey.
Spotlight's on him.
Yes.
So I came across an article this morning, man. 3 reasons why Bitcoin is on the brink of wiping out its gains for the year.
20%.
So, and the reasons what the article kind of mentions for this is, number one, big tech stocks have been dropping hard. And when tech falls, risky assets like Bitcoin usually fall too. Number one. Number two, low liquidity, right? There's less money moving in and out of Bitcoin markets right now, meaning there's fewer buyers. And number 3, rumors that Michael Saylor's company, MicroStrategy, one of the biggest Bitcoin holders, might have sold some coins. So is this fear real? Or is it not? And we should still be putting our money into Bitcoin.
I mean, as you know me as it is.
Yeah.
I don't like to have long conversations. Well, I do have long conversations sometimes out of entertainment purposes, but I don't like to focus too much on the price appreciation of Bitcoin, because I think there's more to it than just that. But from my experiences in 2 previous cycles before, this will be the 3rd one I've been. What I've learned,
Cycles being every 4 years.
yeah, the Bitcoin 4-year cycle. So I was in Bitcoin from 2017, which was the first cycle. Then 2020 to 2021 was the second cycle that I had. And then this one now. From my experience, news is only the excuse. As much as we think that news makes the charts go where it goes, it was going that way anyway. There's plenty of setups I've seen, and I'm like, okay, I know it's going to go up because the chart says so. And then news happens, and it does it. As in, news is maybe the catalyst, maybe the thing that makes you feel happy about making the decisions you make. But most cases, the sentiment has already been there anyway. It's already baked in. So we're come to the end of the cycle. If the 4-year cycle still holds, it should be December, January. So don't be surprised you're going to hear bad news, because it's the end of the cycle. That's just what it will be.
So who made it the 4-year cycle? Why is it 4 and not 6?
The why historically Bitcoin's followed the 4-year cycle, it was speculated, and probably still is by some, that it's because that every 4 years the amount of new Bitcoins issued per block gets halved. So
Is
it was
that speculation? I thought that was an
no, that's a fact. That's a fact.
Yeah.
The speculation, that's the connection.
Oh,
So I would say April, May of last year, it halved from 6 to 3 Bitcoins per block. So what happens is that if the demand for buying Bitcoin remains the same, but the supply is halved, then the assumption is that the market has to adjust to the new supply of Bitcoin. So every time there's a supply shock, the market readjusts, which is where we get a move upwards. That's always been the speculation. But if you look at the charts, I try to look at the 4-year cycle as to when was exactly the top, when was exactly the bottom, and what potentially other. I mean, what is there really a connection between the two? And what we find is that the halving, the distance between the halving and the top is drifting as it's getting larger and larger, the gap between the two. So if the time in the halving happens and the peak is getting longer, but it's still the peak is still the same day, is there another reason why maybe it's going up? So I speculated that if there's one thing that actually doesn't change every 4 years, and it's the same time every year, that has more predictive power than the halving, and it was US elections. US elections the same November or October every 4 years, and Bitcoin reacts 18 months from that moment, always every 4 years. So it's possible.
Oh, so you think it's tied to that?
It's possible that whatever happens, as in, let's think it this way. In the run-up towards the US elections, people are wondering what's going to happen. If it's this president or that president, it could change how you invest. It could change how you behave. Now an election happens, the new president or whatever happened, he does what he needs to do. Whether new policies. Remember, presidents can't just do anything all the time. They have to try and get re-elected. So maybe he might hold off certain things he does until he gets elected, and then does what he needs to do. So it's possible that moment when he becomes elected, whatever he was holding back, he does, and that causes more liquidity in the market. It causes interest rates to go down. It does some things in the market which cause people to behave in a certain way. But it's only if the 4-year cycle holds. Now, this cycle, we had Trump.
Yeah. So who's more friendly to Bitcoin? Republicans or Democrat in general?
None of it really matters. But we had Trump, and Trump was very different from Biden. And he has done many different things, many things different to all previous presidents. He's been very happy with Bitcoin. He want to have a Bitcoin treasury. We're going to do this, that, and the other. And everyone's been hyped about Trump being pro-Bitcoin. Me personally, I saw that as a negative.
Why?
Because markets tends to do the opposite of what you think. And it's... I just said today, market trends work as long as you don't act upon it.
Wait, say that again.
Market trends work as long as you don't act upon it. Let me explain why.
Oh, okay. I think I see where you're going with it.
If we're doing normal business, doing trade, we're doing contracts, doing whatever we're doing. And over time, we notice that, wait, there's a trend here happening. I could profit on that.
Yeah, that's when everything...
Yeah. And it's that change in decision now makes you act differently.
Yes.
That different act now has different results on the charts.
Yes.
As in, it was working in that direction because of what you're doing before.
Until you acted on it.
Now you acted on it, now you act differently. And that might have a different outcome on the charts. Back to the point. The question was about Bitcoin and its price. My honest opinion is that whatever good news or bad news is irrelevant to the charts, because if you actually follow the charts, you'd find that if you had the news or didn't have the news, it doesn't affect the charts.
So what's the chart saying now?
For example, if you have a Head and Shoulders and the neckline was broken, you would find that some reason the news happens at the neckline. Why is that? Maybe it's a catalyst, whatnot, but the Head and Shoulders line is still there. It still goes down or goes up
so
towards
what you're
the
saying is you're looking at it from a small window or a small time frame, as opposed to you have to look at it from a bigger...
That, I guess, but framed another way, we have confirmation bias. As in, we see the charts happen this way and we think, it's because of that news article.
Yeah.
But even with big news like this guy Michael saying shorting against... sorry, it wasn't... was it... Who was
Michael
it?
Burry.
Yeah. Was it who? Because you said that the Bitcoin.
Oh, Michael said apparently there's rumors that he might have sold
he's selling it.
a lot of the Bitcoin that he's holding.
So even the big news like that doesn't mean much.
No. I mean, for example, if I make a sale and it moves the needle, it might move a needle here and there on a small thing, but on a long enough time scale, it in my experience, I'm saying, because I'm saying I'm speaking only about Bitcoin. I'm not about other thing. I'm talking about only what I know. Following the charts, following the news cycles and all that kind of stuff, 9 times out of 10, if you hear good news, that's usually a sign that someone, maybe someone of capital, needs liquidity to sell.
So they're creating the good news.
So they're creating the good news to get people who are involved.
Yeah.
Likewise, maybe the reason you're hearing bad news is because they need sellers to buy in. Because if they also buying out, that you're gonna get a larger spread on the sale. I'm saying, just think logically. People with money and capital have resources. And they're not going to be fair and say, I want to be Islamic and I want to be fair. And no. They're going to do all they can to take your Bitcoin. As they can even force you to liquidate. Do you guys know what
It's crazy, man. I'm not asking you to give me proof because it sounds like a conspiracy.
It's not a conspiracy. It's just normal behavior. Have you heard of what's the name? I've got the name of it. If I can remember the name, I'll say it, but I'll explain what it is. If there's a support line, and for those who don't know or is listening, a support line basically means a price level whereby traditionally people have bought. As when it's come down to that price level, people have bought at this line, therefore it's gone up again. It's kind of been support. You come to that level and it's supposed to go back up.
It's like a benchmark.
It's like a benchmark. Everyone knows that when it gets to that level, historically they're going to buy. There are people who are sharks who, when it gets to that level, they'll deliberately sell, heavily sell. Why? Because they know that people are looking at that line. And they know that psychologically, if that line breaks, they're going to panic. So they force the panic. Force you to sell. Why?
That's crazy.
So that they'll
So when there are sharks, that basically moves it.
Yeah, because they know people have put on automatic stop losses.
Just explain what
stop
shark
loss
is.
hunting. That's what it's called. It's called stop loss
Just
hunting.
explain what shark is so people can follow.
Someone who's a shark, basically. They're hunters. They want to go out and eat meat.
But
Basically, whatever.
but isn't that they hold a certain amount of Bitcoin?
No.
Oh, you didn't mean from that angle?
That's not something else. That's a Bitcoin thing where you had fishes and sharks and whales and
crabs.
I forget that. No, so it's called stop loss hunting. So basically, they know that someone looks at the line and they've already committed in their mind that if it goes below this line, they're going to automatically sell because they're convinced that if it breaks that line, it's going to go down.
Sheikh, all this sounds very speculative to me.
Yeah, it's
No.
crazy.
It's not. I'm saying that.
Thank God we're in real estate. We're assets.
That's
You can
right,
see
bro.
the assets right there in front of you. You don't have to worry about all that speculation.
It's
It's insane.
speculation,
Crazy,
but
man.
stop loss hunting is more speculation because, well, it's part of speculation. The speculation is that there is something real here. That there are people who are buying because there is support. So, and you can look at the order books. You can look at how many buyers are there. So you can actually estimate if I sell this amount of Bitcoin or whatever it is, I can buy up the order book or sell out the order book and force it down. Why don't I do that? Because I want to trigger their stop losses.
Yeah.
When I trigger their stop losses, I can force it down another 10%. If that happens, and I can now buy that premium, I can now get a cheaper Bitcoin.
But I have a question, Sheikh. Is this
Hold on.
behavior...
Let me finish your point. So that being the case, I can now manipulate that. I can now, when it comes to that point,
Said the word you're looking for, brother.
I can now manipulate it by saying,
I know your
I can
question.
spread the news. I can spread the news. It goes both ways, by the way.
see where I'm going.
I can say, look, spread the news on some article. Michael says going to buy Ripple. And everyone's, he's going to buy Ripple. And then they trigger it. It's and then I'll give one example. I'll give one perfect example of this. It happens all the time. I see I'm always like, literally every time I'm saying, no, ignore it. Do you know how many times this year I've heard that an old sheikh in Saudi Arabia says Bitcoin is halal and they show a picture of MBS. The same news, the same wording sometimes, just rehashed. Why?
Really?
Because they want it to move a certain direction.
Reputable, like...
No, it's just noise. No one knows who this sheikh is. No one knows anything. It's just
No, I'm saying these news
it doesn't have to be. It could just be a tweet. And like people message you. Oh, brother, is it true that some sheikh since that? I said, brother, it's the same news from 2 years ago.
Yeah.
Just ignore it. But they want people to be excited and act upon that. Because when you act upon that, you bring bids.
So, Brother Mohammed, you want to ask the question? I have a comment.
I had another question also that popped into my mind. He read my mind automatically, rather than no. But my question, my second question was, is this behavior always applicable only to Bitcoin, or is it across all crypto? Like, do they all follow the same dynamic, or are they all correlated to Bitcoin? So if a Bitcoin goes up, it goes up, and vice versa.
I mean, the 4-year thing, that seems to be a Bitcoin thing because there are other coins like Litecoin, for example, which is a fork of Bitcoin, which means it has the same 4-year cycle, but it's unaffected like Bitcoin.
So different dynamics, completely.
Meaning that if the 4-year cycle should be a thing, then after its halving, it should also have a pump.
Yeah.
But it doesn't. It has a pump. Only Bitcoin has a pump. So that's why I speculated that it's not actually to do with Bitcoin specific halving. It's more to do with something else. Because remember, I forgot to mention a very important point. Bitcoin was launched at an election time. So its halving is correlated to the exact same time as, because the white paper, which Bitcoin was launched, which was 2008, October, that was Obama's election. So when the Bitcoin network launched, which is in January of that,
But doesn't it halve in the summer?
No. I'm saying that if you look at the 4 years, you might think it's to do with the Bitcoin halving, but we also have the US election every 4 years because it was launched at the same time. And ironically,
Isn't it the same year?
Yeah,
Okay.
and ironically, I also discovered mid last year that it turns out that mostly more than half of the countries in the world also have elections in the same time as America every 4 years. Those who don't have elections, they have it pretty much the same time. Some don't. Some have different years, but generally speaking, in that year of US election, multiple other countries have the same election. So my point is that you have election cycles, you have business cycles, which are tied to big events like elections. Remember, even like US budget, the things, they are 4-year budgets. They're things that are tied to that cycle. So in summary, from my experience, all the noise and news you hear about Bitcoin has little to affect. As you might see a correlation, but it's a secondary correlation, not a primary correlation. Because, for example, we heard lots of excellent news that you should have it pumped. But we had nothing. Like Czechoslovakian government just now, the Central Bank of Czechoslovakia just announced 2 days ago that they've been buying Bitcoin. Did it cause anything to go up? But you have a central bank of a sovereign country buying Bitcoin. Did it go up? No, it went down.
Interesting.
I've lost count of how many times I've seen good news, and on the back of the good news, it goes down.
What do the charts show right now?
Bro, I said December, January is the top of the cycle. The only difference this cycle is that
Isn't it going to go down after January?
that's according to that cycle. The only difference this time round is that the downturn we've seen in the last couple of days has come early. It's November, not December. So there's two options here, which again, we're still in speculation. Either it's because there's been some delays in terms of how things happen. Either we've had a little dip down before our next pump, and then actually the end of the cycle will happen in January, which is like it's a momentary dip, which Bitcoin has all the time. Even in its bull markets, I'm not even joking. 2017 bull market, 2021 bull market, even as it's riding up, we had 30%, 40% drop sometimes in the middle of it going up. It goes up like 100%, down 40, 120%, down 30. It has that all the time. So it could be like that. And maybe the 4-year cycle continues. But to this date, we haven't seen any indication that the 4-year cycle has broken. So if you're going to be a trader, you trade the trend is your friend until it's not.
I have a question for you, and answer me with all honesty. Do you really think that Bitcoin will reach $1 million as a hardcore Bitcoin enthusiast thing?
Not necessarily, no.
It won't.
No. I said not necessarily. It could do. It might do. But there's nothing that guarantees Bitcoin success. And I'll tell you why. I know many Bitcoiners say it's in the mathematics. We have the halving. We have this limited supply. We have blah, blah, blah. And technologically, Bitcoin is superior currency to all currencies that exist today. Technologically speaking, that is a fact.
Okay.
But what I believe many don't realize or don't acknowledge is that human beings don't always take the best option. Throughout history, we've had examples of inferior products having more adoption. VHS versus Betamax. Betamax was known to be a better system, but it didn't win. Even Blu-ray and the other one, what was called at the same time?
DVD.
No. After DVD, there was Blu-ray and there was another one. I can't remember what it was called. The other one was the better one, but DVD won out because of marketing. We've had many examples throughout history where human beings have just gone for the more convenient rather than the better option. Bitcoin's no different. Meaning, here's an example. Imagine the global south manages to rise up and be economically strong and powerful, and they start trading their local currencies, and they back their currencies with gold, or they start investing in gold. And basically people invest in their economies, invest in the UAE, invest in China, invest in Indonesia, all these rich countries. I can imagine people saying, okay, what did you use fiat?
Yeah.
Because it works. Remember, as much as fiat is involved in riba and whatnot, it works. I mean, we can't say it doesn't work. I mean, this microphone, the clothes we're wearing, yes. I mean, it worked. So, yeah, there's definitely harms, but the fact is it works.
I'll go even further. I think that we might reach a point where, healthy, strong governments like the UAE might create their own coin and their own token and be like, listen, we're actually going to have our currency backed by some real asset, whatever asset that is in the economy. Yeah, and that could be, we don't need Bitcoin. We'll trade with our currency, with our token.
What Bitcoiners would say, and I would say also, is that this whole idea of we can create our own token has always failed. The first ones to do that were altcoins. They said we're going to create our own token, which is better than Bitcoin.
Isn't USTD backed by the US?
Yeah,
dollar?
it's linked.
It's backed by something. I'm saying that they've always been this history.
Has that failed?
No. It's actually doing very well. It's tethered.
Think of it this way: Bitcoin as a technology is superior to all of the other technologies, but there's one thing it fails in, and it's not a permanent failure, but it's a current failure, and that is its volatility. contractual agreements require some level of stability. If I make a contract, for example, you're into real estate. If I make a deal with you to say I want to buy property off you and I'm going to pay you in Bitcoin, and we set the price in Bitcoin, you have no idea what the price of Bitcoin is going to be by the time you finish the project.
Yeah.
So you're not incentivized at all.
Unless we fix it.
Unless you fix it to something which is, because the thing is, it would work if your supplies are bought and sold in Bitcoin, so land is bought and sold in Bitcoin. If your whole supply chain is Bitcoin based, you can do that, but it isn't. So we would use dirhams because everything about what you're doing requires dirhams. You can estimate over a duration in dirhams and have pretty much guaranteed that it's not going to fluctuate that much.
And then you already know what the inflation is going to be every year. So
whereas the flip side, economies whose currencies, fiat currencies, are more volatile than Bitcoin, for them Bitcoin works because it's actually a better option than their currencies.
Venezuela, right?
Like Venezuela or other countries, like even like Turkey.
Salvador.
I don't know about El Salvador because El Salvador they use their currencies pegged to the dollar. But I'm saying like Turkey, for example. There are countries whereby the volatility of Bitcoin is less than their current currency, so it would work. But my point is to answer your question, is that anyone who tells you that Bitcoin is already won are not factoring in the reality of human beings. Human beings are irrational. Human beings do act irrationally.
I want to pivot the conversation to just investment strategy for a second, yeah? So I'll link it back.
By the way, just to say, I'm not negative Bitcoin. I'm still positive Bitcoin. I'm just saying, realistically, we can't delete the human factor.
You've, Allah Bet, really, really matured in how you address the topic as well. I'll be honest. Allah Bet.
Alhamdulillah. I think I'm the same, but okay.
No, Allah Bet. Sorry, maybe mature is the wrong word. Nuanced. Yeah. Sorry, I didn't mean that.
Yeah.
You've always been mature. Allah Bet. But you're much more nuanced. You've always been, but even I can see there's a lot more. Allah Bet.
Alhamdulillah, with knowledge, I guess, isn't it?
No, mashallah, tabarakallah. I should have introduced at the beginning, people, mashallah, government entities consult you on this, scholarly bodies consult you on this.
Yeah, that's important. But
yeah, Islamic scholarly bodies consult me on Bitcoin, government consult me on Bitcoin. Jazakallah khairan. Guys, with that said, may Allah bless you, man. If you want to check out our network of 7 to 9 figure Muslim entrepreneurs, investors, senior corporate executives, you can click on the link below, inshallah, and apply. We do reject the majority of applications that come through, but for those that are, as accomplished and handsome as Brother Mohamed, so Jazakallah khairan, we have a space for you. With that said, may Allah bless you. Subhanaka Allahumma wa bihamdik ashhadu an la ilaha illa ant astaghfiruka wa atubu ilayk. Assalamu alaikum wa rahmatullahi wa barakatuh.